that will be reporting its Q4FY25 numbers. Reema is joining in with us of the key expectations. Reema, good morning.
Good morning. So, after TCS disappointed the street a bit, sounded a bit cautious, all eyes will be on Wipro. Now, the street is anticipating a top-line decline. So, dollar revenue is expected to decline by 0.5% on a sequential basis. In constant currency, too, revenue is likely to be down 0.2% according to the CNBC-TV18 poll. It's within the company's guidance of a -1% to +1% growth, but revenue in the March quarter on account of the macro uncertainty and seasonality is likely to decline on a quarter-on-quarter basis. EBIT margins are likely to be a little subdued, 17.1% versus 17.5%. Now, the key focus is not going to be on March quarter and what the numbers are, but the guidance, because the macro uncertainty has increased. Decisions are being delayed. Companies are postponing their investment. There is a lot of scrutiny about tech budgets. So what does the company say about Q1? Well, if they decide to guide, then the street is going to, the consensus seems to be that the company will again guide for -1% to +1%, though there is a Nomura, for instance, which expects a -1.5% to +0.5%. Also, Wipro, compared to its peers, is seen to have a higher exposure to discretionary demand because it had bought this consulting company called Capco in Europe. And consulting gets hit in times of, when there is scrutinization of, budgets. So it has a higher exposure to discretionary. So what Wipro says in particular about discretionary will be watched very closely. The stock is, along with the rest of the IT pack, has also tumbled more than 20% on a year-to-date basis. Back to you.
Okay, Reema, thank you so much for that. Surely keeping an eye out on Wipro. But